All right, it is Wednesday, and I think we all know what that means, but in case you don't, for some reason, I'll tell you. It is Mike on the Money with Mike Giordano from Williams Wealth Management. Mike, as always, great to see you. We appreciate
Same
it.
here.
Today, the Federal Reserve met and decided to hold interest rates steady, despite President Trump's request to lower borrowing costs for consumers. The real news is what they signaled about the future. So, Mike, can you tell us what's the Fed's goal when it comes to setting interest rates to begin with?
Yeah, it sometimes for people watching, it might feel like it's a kind of arbitrary what they're doing with interest rates, but really the Fed has two main goals. Number one is they want to have maximum employment. So anybody who wants a job, they want to be able to get a job. They want to promote that. And on the other side, they want to promote stable prices. So that means inflation around their 2% target. If they have both of those goals in check, then they don't need to do anything with interest rates. If they're not sure where they're heading, then they need to start thinking about which one's going to be a little more out of whack, either the unemployment, economic growth, or prices and inflation going higher.
And I think some people may be wondering how the Fed or what the Fed thinks about current trade policies and how that may impact the economy.
So I follow this stuff all the time. So the word uncertainty I am certainly tired of hearing the word uncertainty. And we heard uncertainty several times from the chairman, Jay Powell's mouth today, because they're not really sure what the situation is. They say, on both sides of that, whether it's stable prices, inflation, tariffs could cause prices to go higher inflation. It could cause people to stop spending money, and that could, hurt economic growth. So they're not really sure which way to go here, and they indicated that they've got to wait to see what exactly unfolds with the economy. You've seen a lot of soft data, consumers saying they're not spending as much money, businesses saying they might hold off on doing some projects, but we heard a lot of those same things in 2022, 2023, and while people were saying these things, they were still going out and spending. And so the Fed's basically saying we got to wait for the hard data to come in and see whether people really are cutting off their spending, businesses really are delaying investments.
And you mentioned uncertainty, but one thing that is for certain is that I think we all want lower interest rates. What can people expect that, especially people looking to buy big ticket items like a new house, for example?
Without question. I mean, we're in spring shopping season. People are going, it'd be nice if I could get rates a little bit lower. It makes that monthly mortgage payment a little bit easier. The hard thing here is it's impossible to know which way it's going to go because of what we were just talking about. The Fed's not sure when they could cut. Jay Powell said that, he could see a scenario in which the Fed has to cut this year. He could also see a scenario in which the Fed does not have to cut this year. And so it seems like for the foreseeable future, you're going to be seeing rates here in the upper sixes, close to 7%, where we've been for several months.
And what can we do to manage the volatility? Stocks have been on a roller coaster ride. Our portfolios up, down, all around, side to side. What's going on? How can we manage it?
It's wild. It's been like Six Flags here in the markets over the last month. We had a real sharp decline there after Liberation Day, and then there was a pause on some of the tariffs, and Trump backed off on firing Powell and some other things, and so then the markets kind of made a rocket ship the other way. And so if you're just casually watching this stuff at home, it can be extremely jarring to go, what's happening with my portfolio? So the most important thing to recognize is that, these kinds of things, these kinds of financial moves that are so sharp, they can really play with your emotions. They can make you go all out or all in. And the most important thing is to step back and say, what do I need? Like what kind of returns do I need to achieve my goals? And if you've been unnerved over the last month psychologically, then maybe you try to strive for a little bit more balance in your portfolio to kind of smooth out all that sharpness. And then secondly, you want to make sure you know how far you are from your goals. If you're close to putting your child in college, or you're close to retirement, and not only can you not handle that whipsawing move, but it might be detrimental to your goals, you want to try to find ways to reduce your risk of not being able to achieve those goals.
All right, Money Mike breaking it down for us and keeping our wallets full. We appreciate you, Mike. Thank you.